Hey, Andrea. Hey, guys. Can everyone hear me? Hey, Amy. Hey, Andrea.
Good morning.
Good morning. Let's see. Sorry about that. All right, we got a few more joining. I was a little late to the punch by a minute, so I apologize. So if somebody can unmute and let me know you hear me okay.
Gotcha.
I hear you.
Okay, great. All right. Good morning, Amy. So this is Rev Up Module 8. We're talking about financing the sale. And here we have our very own in-house lender, Amy. So Amy, before you get started, let me let a few more people in.
Sure.
We have some on the phone and we have some on the video. And I'm gonna give you, did you want to share a presentation, Amy?
I have one, but it's not really a presentation. It's just some information, and we can pop it up there in
Okay.
in a bit.
Then
Hey,
I'm gonna make you, let's see if I make you host. Hey, Andrea, if I make her the host, do I lose control or we both
I
have
don't
it?
think you do. I don't think you do.
All right, let me go ahead and do that. All right. There we go. So we might have a couple more pop in, but let's go ahead and get started. Amy, you want to give us an introduction of yourself and your company?
Sure. And Joanna, I just sent you an email.
Thank you.
You're welcome. So Amy Ramsey, I am with Atlantic Bay Mortgage Group. We're one of the preferred lenders with Realty One Group Revolution. And so I have been in the mortgage business over 25 years. I'm a certified mortgage banker. I'm a certified mortgage advisor. All that to say that I spent a lot of time taking a bunch of classes. No, it's a little more than that. So what it all means really is that I consider this my profession, and that just like you guys with your education, it's just as important for us to continue on with that. So a little more above and beyond what you would have to do with just your licensing. So that's the story of me. Atlantic Bay has been around for about 25 years, and Atlantic Bay is a mortgage banker. And what that means is that we lend our own money. So we are direct seller servicers to Fannie Mae, Freddie Mac, HUD, Ginnie Mae. So we're using our own money. We are not sending this loan somewhere else to get underwritten and then come back. That would be a broker. So we're not going to do that. We are at the stage right now where we are retaining the servicing on about 70-75% of our loans. So if your client gets a loan with Atlantic Bay, there's a really strong chance that they're going to continue to make their payments to Atlantic Bay. The investor may be Fannie Mae or Freddie Mac, but they're going to make their payments to Atlantic Bay. So
Amy, can I ask you a question?
Yeah.
How would that benefit our clients? Is there like a beneficial way? Because, usually, you guys are lending your own money and you're retaining it, which is not exactly how I understood the process.
Yeah. So typically speaking, when you sort of have to look at it as like one-stop shopping, right? So you meet someone, you meet me with Atlantic Bay, you go through the process, it goes to my servicing team. If you ever have a problem, right now with the mail, for instance, the United States Postal Service, insurance notices are getting lost in the mail, and so this is the time of the year where we're paying out, taxes, those kinds of things. So things happen in servicing. I mean, that is just the way it is. But when you are servicing the loan and you've got a contact, your client literally could call me and say, Amy, something's going on with my insurance. I don't know what to do about it. And I just pick up the phone and call my team. Whereas if it was with somebody else, and honestly, even with some of the bigger banks, but with somebody else, that loan has gotten sold, it's gone to somebody else. You don't have a contact anymore to reach out to help solve an issue. So it just sort of amps up the level of customer service. So that's part of the reason why. Yeah, and brokers, right, are never holding those loans. They will always be sold. And in some cases, sometimes more than once, but a lot of that has really stopped over the years. Typically now it's really kind of, if it does get sold, it's kind of sold once. Just as a fun fact, the income in mortgage lending is from servicing. It's not from originating the loan. So every time you write that check to whoever you're writing that check to, a portion of it goes to the servicer. And just think about that. So you've got, million loans and everybody's writing a check and a piece of that money goes into your bank account for an extended period of time. You can sort of see where that's really where the income is in mortgage lending. So I hope does that kind of make sense, Gina?
Yes, thank you.
Good. All right, cool. That was a great question. So I think what we were going to talk about a little bit today, and we can just, since it's a small group too, that's always nice. We can sort of just ask a bunch of questions. But what we want to talk about the process, a little bit about what happens on this. And I don't want to look at this kind of in two different ways. The first thing is I'm going to share with you what I say to somebody when they call me.
Hey, Amy.
There are 4 things. Yeah.
Amy, give me just a minute before you share. Hold on 1 second. Right, I had to let some more agents in, and I was making sure we both could do that. If a button pops up where an agent's trying to get in, just click on. Okay, thanks, Amy.
Yeah, no problem. Yeah. Okay, so I've got 2 things. So the first thing is I'm going to go through exactly what I tell people that we're looking for when we talk about getting a mortgage loan. Okay, there's 4 things, and we're going to talk about that. And then the second thing is really what is a great role for you guys in this process. Okay, so there's 2 pieces to this. All right, so let's start with the first. The first one is there are 4 things that we're going to look at. And this is literally the conversation I have with no matter who they are, no matter if this is their 5th house or if this is their 1st house, because so much has changed in our industry and continues to change. And I do mean continuing. We've had some updates just last week. So, and we'll talk a little bit about that. But the first thing, and honestly, the most important thing, and it's truly the most important thing really in somebody's life, is what is their credit score? So if you are talking to somebody and they're like, I don't know if I can do this, the first question I'm going to ask them is, do you know what your credit score is? And do you know what their answer is? Anybody got an idea?
They think they know, but it's probably not the correct number.
Correct.
Agree.
Yeah. So the first thing they're going to say is, well, my Credit Karma, my, one of those, the app on my phone says that my credit score is, 700. Okay, well, that's great. That number that's on your phone comes from, it's a FICO score, and they are selling you a credit card, maybe a car loan. right? So those are, and there's about 10 different credit algorithms, but that one is, is typically going to be credit card, car loan kind of information. A mortgage loan is about 30 points lower, 30 points lower than what they see on their phone. And that's really important because the minimum score that we use for a conventional loan, which is just Fannie Mae, Freddie Mac, down the road, middle of everything's plain and simple, is 620. An FHA loan can go lower than that, and a VA loan can go lower than that, but there's some strings that get attached to that. So that's the first thing we ask is, what are your credit score? Because that is going to drive everything else, the rest of the conversation. What loan programs you qualify for. Is there a first-time home buyer and they want, down payment assistance, credit score requirements? Are they looking at a jumbo loan? Credit score requirements. Credit score drives it all. So that's the first thing we're going to look at. The second thing we look at is credit usage, right? So somebody calls up and they say, I'm like, what's your credit score? And they say, well, it's a 740, which means they have, 710 credit score, which is good. So I'm like, okay, you've got a 710 credit score. So it sounds to me like you probably you don't carry a lot of credit cards. You might have a student loan. You may have a car loan. Because you can tell by someone's score how much credit usage they have. And so that's going to be the second thing, because we're going to look at the number that shows up on the credit report. And we're going to, and it's not, I hear this all the time. Well, I make extra payments every month. Doesn't matter. We're using the number that's on the credit report. So we're going to take that, we're going to add it to the proposed monthly payment, and we're going to come up with what they can qualify for. So that's the second thing we look at. Number one, credit score. Number two, credit usage. Third thing is employment and income. So a mortgage loan is, when you fill out that application, it's basically a 2-year snapshot of your life. Where have you lived? Where have you worked? What does your credit look like? I mean, it's this 2-year picture. We want a 2-year history of employment. And there are some varying degrees of requirements on that, depending on sort of what the loan is. But for a standard W-2 salary kind of person, we're looking for a 2-year work history. A self-employed borrower, which we see a lot of this right now, you have to have 2 years self-employment, 2-year tax returns, self-employment, right? Because the self-employment income comes from what somebody's willing to file on their taxes. Do we know what happens with that? Any ideas?
Don't you look at their profit loss statement?
So great, we do, Karen, and that's a new thing, right? That's a new COVID requirement. So with self-employed income, the income is actually derived from the last 2 years' tax returns. And 9 times out of 10, and I totally get it, right? They have fantastic accountants, and they're using the current tax laws to the full extent of their benefit. Great. They write off everything. Great, because it's illegal. It's great until you want to go buy a house. Because the number I use is the number on the tax return that's averaged over those last 2 years. Perfect example, had this last week. Gal has a coaching company, like a professional, like life coach. And 2 years ago, she wrote off $80,000. Last year, she wrote off $90,000. So her income was actually negative $838,340. And, so she's like, but I made $160,000, not on paper. So self-employed gets really, now to Karen's point, what happened with COVID is we now look at a year-to-date profit and loss. So so right now, right, I'm looking at 2019, 2020 tax returns, and a year-to-date profit and loss statement and that is not income. That is to be sure, they're still self-employed, they still have a business, there's still money coming in. It hasn't, maybe it's declined a lot, maybe it's gone up a lot. That really is just a bellwether of what's happened in their business. Because you can imagine in 2020, and actually part of, in 2021 with COVID, people who were self-employed, I mean, their businesses totally shut down, but they were able to still go out and get a mortgage loan because we weren't looking at those tax returns. Well, the investors finally woke up and went, wait a minute, these people don't have jobs. So that added that additional layer of, we've got to have that profit and loss on there. So that's the third thing we look at. So we're looking at a 2-year history of your employment and your income. The fourth thing we look at is going to be, do you have money saved for closing? So I can tell you that between the credit score and this question, these are the first two you really want to ask somebody, because there's some myths out there that you says you can sort of close a loan with not a lot of money, and that's just not true. And I'm going to throw this back at you guys a little bit too. So the minimum down payment requirement is going to be somewhere between 3.5%. So you got a purchase price, 3%, 3.5%. That's going to be the down payment. Okay, and then you're going to have closing costs. Closing costs are going to be a percentage of the purchase price, but you can bet it ain't going to be less than $3,500, because we got attorneys involved, and we've got title insurance, and we've got appraisals, and we've got this, so there's things involved. So at a minimum, it's going to be $3,500. It's probably going to be a little bit more. So when I'm talking to somebody, and it could be a $200,000 house, it could be $150,000 loan amount. Somebody really has to have somewhere around $12,000 to close a loan. It can be, some of that can be a gift, but you got to have about $12,000. Now, what happened in the past is we had sellers, we had a different market, right? And sellers could pay part of those closing costs, right? Have y'all seen any of that lately?
No.
No, none of that going on. And I do think that if you're coming back into this, like you bought a house several years ago, or maybe you've done some research online, that still pops up, that, the seller will pay some closing costs, but we all know that's not happening right now. And even if you do 100% financing, if you're a VA, if you're a vet, and I love our vets, that's 100% financing, but they still have to have money to close the loan. So it may not be 3%, but they're still going to have $4,000, $5,000, $6,000 depending on the purchase price. USDA 100%. Even state housing, which gives you $8,000 towards down payment and closing costs, you still got to have money to close the loan. So those are going to be the 4 things that we're looking at. Those are the 4 things that we talk to every single person about. So I'm going to stop there before we I want to go to the second piece of this, which just talks about where you guys can come into play with this. So any questions? No. Oh, good. You know what your credit scores are. You know what your questions are. All right, cool. All right, so then now so I get this question a lot, and there are certain real estate agents who, I've got a close friend who's like, I don't do numbers. But I will tell you that in today's environment, when you're talking to somebody, and particularly if you're a newer agent, right? And even a newer loan officer, right? You get so excited because you've got somebody to talk to. And this is like, oh my gosh, I've got a live one, right? I can't wait to talk to them. Do 2 things. Number 1, don't put them in a car until you have them talk to a lender. We're almost like therapists sometimes. I have run across people that I have literally called up the agent and said, do not get in the car with these people because one of them's crazy, right? So whatever you do, don't get into a car with someone Yeah, I mean, unless you're their best friend or something, but that, without them at least having a conversation with the lender. And then, I mean, yeah, that's right. No driving until a privy. That is so true. And I cannot tell you how many times it still happens. It's kind of crazy. So, yeah, so always reach out. But the second thing is, and you guys can vet these people to a certain extent, right? If they call you up on Sunday afternoon and you're sitting there talking to them and they want to go see a house, number one, that's usually kind of a red flag, but they want to go see a house. You can say, you know what, I've got a lender I'll try to connect you with. It's a little hard sometimes to find somebody on a Sunday afternoon, but I know what two things she's going to ask you is, do you know what your credit score is? And have you had the ability to save any money to close? And they're either going to say, yeah, my phone says it's, 620. And what happens if they say 620 on their phone? That means that credit score is a lot lower. And then the second question is, no, I don't have any money saved. Or yes, I do have money saved. So it doesn't mean that you're not sharing that contact information with me, but it's going to help sort of put some guardrails on where you head next with this particular person, right? So if they say to you, I got a 620 and I've got $3,000, you may say your response to them may be something different. What would your response be, by the way?
Can you repeat the question that the response is?
That's okay. Yeah, no. So they call you up, you say, oh, hey, I'm going to try to connect you with Amy, but a couple of quick questions. Do you know she's going to ask you, do you know what your credit score is? And do you have any money saved for closing? Person says, yeah, I got a 620 credit score and I got $3,000. What is your response back?
It's tough because you border from wanting to be too transparent and saying that, hey, 3,000 is probably not going to cut it. But obviously, I'm not an expert in the loan process, so I can't really speak to that. But yeah, I would probably be like, let me set you up on a search. We'll see if there's anything else in your price range and what I can do, waiting until they can maybe connect with you for, a professional answer.
Yeah, that's exactly the situation. I mean, that is a great answer, Joanna, is save yourself some angst and wasted time, putting somebody in the car that is not even close to being able to do anything. Let's just say, you know what, let's put you in front of Amy. Here's her contact information. Here's her calendar link. It's in my contact. I'll send it to you. Let's set up a time and let's talk about it. Now, I will tell you that if somebody does call me and they say they have a 620 credit score and they got $3,000 in the bank, I am not going to say, see you later, wouldn't want to beat you, right? See you, wouldn't want to beat you. I will say, let's talk about how we can get you ready to buy a house in the future. So that is something that is very important to me, is that we provide everybody with the opportunity to buy a home when they are ready to buy a home. And I have worked with people for a year and finally gotten them into a situation where they could buy a home. And that takes credit counseling, that takes saving, but it also just takes being a truth teller and being realistic and just saying, hey, this is not you. It's not that you can't buy a home. It's when can you buy a home? So, and it's okay, right? That we have these conversations together, because you know what? Who will they really come back and call when we get down to end of that, right? Me and you, right? We cared. Oh, I cannot tell you how many people just say, sorry, I can't help you. I mean, it's not cool, but it happens. And it's just, we don't want that to happen. So, so that would be my suggestion to you, is don't feel bad. You don't have to know the answers, but there's no reason for you not to say, she's going to ask you about your credit score and do you have money saved to close? And if they say, I don't know what my credit score is, that's kind of a red Because everybody and their brother has it on their phone right now. And the other thing is, truly, if they say, well, I haven't had a chance to save anything. And Joanna, to your point, set them up on a search. Let's figure out what their real budget is. And let's get this, and we get it moving. We get it moving down the road. So we've talked a little bit about what I'm going to say. We talked a little bit about what you guys can say, right? So let's stop for a second and what kind of questions do we have around that? What's the one thing that you're like, oh my God, if they ask me that, I'm just going to have a heart attack?
I think oftentimes, I've been doing real estate in Indiana for a little bit, but oftentimes I don't necessarily know what that cash flow is like. So, they'll want to look at a house that's within their price range, but knowing that we're either going to need to shoot a gap or, provide incentives to get the deal done. Sometimes they're willing to pull that trigger, and I don't necessarily have that information if we can pull that trigger or not. And it might be a Sunday afternoon at 3.
Right. So that's a great question. So a couple of things around that. So we're back to this scenario, right, where they reached out to you. You said, get in front of Amy. They got in front of me. We know exactly where they are, right? Now, here's a great example. I got a guy right now. I finally got him to complete the application, right? And he completed the application, but he doesn't really want to give me his documentation. And then I'll provide him with some information, share it with him. And when I do talk with somebody, I get an application, and I pull their credit and I look at their documentation, I will issue a pre-approval. I'm looking at the documentation though. I'm looking at a pay stub. I'm looking at a bank statement, and then I will issue a pre-approval. If you do not do that, particularly in this market, I will not do it. And if you need somebody to do it, you will need to call another lender. And I will tell you why, because I am not the person that's going to put somebody's $20,000 due diligence on the line because they got excited about buying a house.
Yep.
Not going to do it. Now, so this guy calls up, he fills out the application. He really won't give me his documentation. He went and looked at a house. He disappeared. He showed back up Saturday in email. Amy, I want to up my budget to $500,000. Can you send me a new pre-approval? No, I cannot. Not until I talk to you, not until I have a conversation with you, not until you show me a current pay stub and a bank statement, right? Because there is too much money on the line right now to mess with somebody like that. And just is too much. So when I'm talking to somebody, and one of the things, particularly in today's market, Joanna, to your point, right, is this is not just give me an offer, see you when I want to be you, right? We got to look at how much cash do we actually have? How much is the minimum I can put down? Do I have enough money to put above asking price offer? All those things have to come into play, and all those things are part of the conversation that I have with somebody, right? So that when you get ready, you and I are talking, and I'm going to say, you're going to call me up and say, hey, we're going to put in an offer. Can he do that? I'm like, yeah, you can do that, but we can't. I mean, we can't go over $20,000. End of story, right? So that we know exactly what we've got when we're going into this situation and making these offers. Because it's insanity. So crazy story. I got crazy stories like crazy. I am telling you what, there's some stuff out there that you just would be like, whoa. Yeah. So good question though, Joanna. Karen, did you have a question?
No, I was just going to say, I run across a number of people that have begun their home search, and I'll ask them a few questions pertaining to how prepared are you to move forward, and do you know your affordability? And quite a few people have no clue how much they can spend, and they want to go see a $400,000 house, and they get pretty irked when I tell them that I'm finding that the pulse of the sellers are that if you don't even have a pre-qual letter, they don't want to let you in their house. They don't have to. So,
Right.
it's amazing how many people are not wise about the steps they need to take. And it's always a joy when I meet somebody that says, oh, I've already talked to a lender.
I
I
know.
know what I'm doing.
Yeah. Yeah.
Wow, thank you. Make
Yeah.
my job easier.
It
But
is.
that's discouraging when I feel like I have to be the bad guy and set them back to the place where, do you know how much you can afford?
Yeah. And it's, yeah, that's stressful, right? I mean, you're like, oh my God, I've got somebody who's interested in something, and I don't want to be the downer, but I tell people this too. And they're, let's just say they want to go look at a $400,000 house, but they qualify for a $300,000 house, right? So I tell people it's like going to buy, if you go to the Lexus store and you drive the car because you really love the Lexus, because who doesn't love a Lexus? And you get there and you go, I can't afford a Lexus. What the heck? But you've driven it around the block and down the road, right? And you're like, I'm sorry, you got to go over to the Honda, to the low end of the Honda. Well, that bites. Nobody wants that after you've driven the Lexus. It's the same thing with buying a house, right?
Right.
They go in and look at the $400,000 house and they love it. And then you're like, sorry, you can only buy a $300,000 house. I mean, that is just horrible.
I do have a question, Amy.
Mhm.
This is Karen. So in regards to the folks that are very nervous about having their credit pulled, there used to be a theory that you would have, from the first time you had your credit hard pulled, you would have a period of time to continue shopping. What is
Mhm.
that window currently?
It's 30 days. And great question, right? So I hear that a lot. So two things. The first is it is 30 days. So when they built out those, remember there's 1,000 different, there's all these different ways to look at credit, but there's about 10 different credit algorithms. The mortgage one is built under the assumption that you're going to shop. Okay. So if you go out and you're going to shop and you've reached out to this person, and you've reached out to this organization, they both pulled it, it is not going to have a dramatic effect on your score. Now, even if you didn't do it within 30 days and the second one was in 45 days, a mortgage score does not make a big move in your credit score. Again, it's how it's designed. Now, they want to go buy a car. Okay. So they go buy a car and they go into the dealership and you sit at that little table and you don't know what they're doing because they've all disappeared. And they come back and you're like, yeah, we got you the best deal. We can get you this, we can get you that. Turns out they've just sent your credit application to 12 different car finance companies and they pulled your credit 12 times. That will drop your score by 50 points and it will take 4 months to bring it back up.
4 months.
Okay.
And what
At least
about
4 months.
what about if they are renters and they're applying for potential other places to live because their landlord just did a doozy and did a rent increase for them?
Mhm.
What kind of recovery for those renters because they're applying at 5 different places trying to get in somewhere?
That really doesn't, I haven't seen that have a big hit on it, Karen. And some of that too is that a lot of these places like that, and some of the banks, if you're getting a credit, if you're getting a checking account or something like that, they're pulling just a FICO. They're just pulling one repository, and it's not sort of mass going out there like it does for a car. So I haven't seen that have a big impact on it as of yet. I have not seen that. The thing to know though is that when you go to get credit, car, mortgage, whatever, it is a hard inquiry. So there will be movement in your credit score, but it should not be dramatic. And typically if I get the phone call that my it dropped 20 points, well, they've done something else in there. They've maxed out a credit card or they've missed a payment. So it all comes together at one time, right? It's not an individual isolated event. So yeah. So you have to sort of look at the big picture. Now, the second piece of that is the first thing that we do, and we have the ability to do this, and a lot of people don't, is the first thing I do is I actually pull a soft pull, which means I pull 2 of the repositories, not 3, so it does not affect their credit score. And I
Okay.
looked at it and I go, okay, this is heading in the right direction. Let's take the next step and pull the hard pull. I mean, and do the full thing and move forward. So we start with a soft pull just to be.
So Amy, are you available nights and weekends too, or just during the day?
No, ma'am. No, ma'am.
Okay.
So I work my butt off for you from 8 o'clock in the morning till 5 o'clock at night or 5:30. And I shouldn't say I'm not, Karen, because I am. But it's also one of those things where, again, let's all have the conversation with someone, right? If you're getting in the car with somebody on a Saturday, I mean, do you know them? Have you talked to them before? What was the conversation?
You got to set expectations with your clients. You know what? It's Saturday and you haven't done this already. I mean, exactly what you have to do. You have to set expectations. It's not going to get handled till Monday.
Right. Now, I will tell you this, though, and Andrea knows this, and Diana, and other people that I work with there. I work on, as do you, I work on relationships, right? So if you are somebody who you're in it to win it, and you're doing all the things that you need to do, and there's something that comes up, I am there for you, right? I am not there for you to just, hey, do this for me right quick. Because to Gina's point, I mean, so let's work together as a team and set that expectation. So typically, Karen, I answer that question that way because typically the people, they have set the expectation. They've set the expectation. I mean, this is a perfect example. This gal who had the $90,000 loss on her tax return. Okay. She calls up the agent. She's got to go see this house. The agent takes her. This is like, it's Friday. It was Friday afternoon. Friday, I got to go see this house. She takes her to see this house. Does she fall in love with the house? Sure. She falls in love with the house. They've got to make an offer on the house. This girl has not even completed an application. Self-employed. I need 2 years tax returns. I need a year-to-date profit and loss. I need, bank statements to show that, the money she's got on the profit and loss matches what she puts into her account. We need to make an offer. We need to make an offer. We need to make an offer, right? I finally get the application, and this is not mine, this is somebody on my team, one of the gals who works with me. We get the information, and she's got a $90,000 loss on her tax return. So now we have to make the phone call that says, hey, sorry, you don't qualify. We need to do this, and there were some things we could do to hopefully get her prepared to go buy. I mean, because she had some trust income, and but you start racing through that stuff and something bad's going to happen. So I hope that answers your question, Karen, in not a bad way.
Okay, another point I want to ask is in regards to the credit rebuild, do you have companies that you work with that you would take those clients to, or suggest that they call, and how does that work?
Yeah, good question. So the first line of defense is we pull the credit, I look at it, and we have with the credit agency that we work with, we have the ability to go in and do a what if simulator. So I can go in there and I can hit paid off this credit card, open a new credit card, immediate time frame, 4 months, I can go through and look at it and go, okay, if this and this happened, your score is going to go to this. So that's the first line of defense, right? But sometimes you look at that stuff and you're like, this is bigger than me. And this is going to take a little time. So I work with a couple of people locally. I don't use these national companies because what they want to do is suck them in and make them pay $80 a month for a year when it's just not necessary. So I use a couple of local people who are not attached to some of the big companies. Yeah.
So if you are working with somebody, Amy, and they have delinquencies,
Mhm.
how do those actually get removed? Are the companies that you're working with, do they help them literally remove that delinquency? Or is it always on their file?
Well, it depends on what it is. So for instance, here's a little factoid, right? On medical collections, they don't have to remove them. They don't have to remove them. The credit is still the Wild West in this business. They are so unregulated. They do stuff that just makes me so mad. I can hardly spit fire. So some you can get removed and some you just can't. And you can call up and it depends on who you talk to. My son buying a house, pull up a credit. I mean, he had 2 little credit cards. There's a medical collection. Well, he's been on my insurance. How could there be a medical collection? So had dropped his score. I talked to my guy who's local and said, hey, what do we do about this? He said, Amy, have him pick up the phone and call and ask them nicely if they would drop it, if they would remove it. So he called up, yes, and they're like, no. So hangs up. I call James, like, James, he said, no. He goes, tell him to call back and ask for a supervisor. Hang up, calls back, asks for a supervisor. Yeah, I'll remove that for you. Removes it, score goes up, gets the house, life is good. Now, I will tell you that there's a lot of, I'm seeing this now, and I'm going to tell you right now, this is illegal. It is illegal. So that is the word that I'm saying. It is not legal, right? That there are people out there saying they're removing delinquent debts like student loans. They're removing it. That is not legal. Okay, so number 1, not legal. Number 2, guess what happens behind the scenes after a loan closes? Goes through an audit. We pull up, we have like 26 different databases. Guess what if it's gone and it shows back up? Now you're in deep doo-doo. So do not fall for that. It's interesting, Karen, because for instance, like there are some credit companies that will do things and some that just won't. And that's it. And I can't remember, I had one not too long ago, and I don't know if it was Capital. It was one of them, Synchrony, one of them that will correct it, but they won't remove it.
Well, that's good information because I thought that there was a company that charges to remove delinquencies off your record, but I didn't know that they were quantified by type. I didn't know medical issues couldn't be removed. I didn't know that. I thought it was like a clean slate. So that's not real.
It's not that it's not real. It's just, I mean, it literally depends on who you talk to. It depends on who you talk to. There is not, so a medical collection can stay on your account for 7 years. They do not have to remove it. They do not have to remove it. So but my son calls them up and says, acts nice, and they remove it. So there's not a hard and fast rule. Now I do think there are some that and it just goes back to the company, and that's why you got to work with somebody who's a really good credit consultant when you get into that kind of situation, because they know which ones will and they know which ones won't. And a lot of times what I have found with these national companies is they take your money and they act like they're going to get it fixed, and they don't. It's really disheartening. Fun factoid, Credit Karma is actually owned by Lincoln Law, which is a credit repair agency who are probably one of the worst in the business. If you were to look them up, they probably have so many complaints against them as an organization. But people are like, well, I got Credit Karma. Well, yeah, that's what they're doing. They're getting everybody's credit and then trying to suck them into the credit repair business. So it's a slippery slope.
Do you know about rescore.com?
I've heard about it. And interestingly enough, some of those too, Karen, like I had one of these the other day. It came across and you could tell that they had worked with them because one score, and it's usually Equifax or Experian, I can't remember what it is. This one score was 746, right? The other two were like 640 and 660. So it helped with maybe buying a car, maybe getting in an apartment. You know, the ones that where they'll just pull like Equifax or something like that, it'll pull it up, but it doesn't necessarily mean it's gonna raise all three of them. And there are some cool things you can do, and this is why it's kind of cool to work with somebody who knows what they're doing. I mean, and one of the things I'll send out to all of you guys too is I have a flyer that talks about what goes into your credit score, and I can show you that. But what goes into your credit score? And, you know, 30% of it is your balance, right? Versus your limit. So let's just say you're at, 80% and you're like, okay, that's killing my score, and it will kill your score. Well, Amy, I can't pay it off. I don't have enough money to pay that down. Well, go call the company and raise the credit limit. So now my usage drops back down to 30%. I haven't put any money toward the balance, but I've raised my credit limit, and now my score can go up because I haven't maxed out that credit card up to the limit. So there's a lot of things that can happen. The other thing that happens a lot too, Karen, and you may hear this, is that a lot of these companies come out and they say, well, these national companies dispute everything. Let's just dispute it. Because when you dispute it, it sort of puts it into a holding status and your score will go up. Well, in mortgage land, they figured out that that's what was happening. So you have to remove the dispute on when you're getting a mortgage, and that will drop your score. So you have to look at all of it. I know we've only got about 5 more minutes. That's good. That's a good question. Credit. I mean, telling y'all, it rules the universe. Rules the universe. Anything else? Cool.
Thank you for your time.
You're welcome, Karen. I've got two PowerPoints. I mean, 2 flyers that I'll send you. The first is about the credit, and the second really is just about the process. Like, do the application, send in your stuff, we order an appraisal. I mean, it's called Loanopoly. Looks like a little Monopoly table, and I can send it over to you that you can share with people. But the credit one, and that is something that you could share with a borrower, just to say, hey, here's some things to be thinking about, because it really does sort of rule.
Please send it.
I will. It's good. It's good, and it's, like I said, it's shareable.
Do you guys have, and I don't know if it's different in North Carolina, but do you guys have a pool of appraisers that you pull from, or do you have your own panel of appraisers for your program?
We have our own panel. Yeah.
Awesome.
Yeah. So we try not to use the big AMCs, appraisal management companies, because we do have our own panel. But sometimes you get I had one in Wadesboro. I mean, I didn't have anybody in Wadesboro, so we had to go to an AMC. But we do everything we can to not use them.
Awesome.
VA appraisals have gone up, by the way, just in case y'all hadn't heard that. So the cost, it's all going up.
Well, Amy, how can they get in touch with you after this broadcast?
I will, I'll actually put my contact information in this chat, but I will also send out to you guys. I have the contact list, and I'll send you out an email just to, I'm going to take a picture of that so I know who's here. And I'll send out some information with my contact information as well.
Okay.
So it's
All right. Well,
Perfect.
Amy's doing that. I just want to thank everybody for jumping on this morning. And look, when we can hear it straight from the professional, that's what we like, right? So take advantage or the opportunity to follow up with Amy and ask questions, follow up with your mentor, your BIC. So again, Amy, thank you so much for taking the time to be with us this morning. I know you're really busy. We appreciate you.
great. Thanks. Love you guys. Happy holidays. Joanna, I'll talk to you soon.
Thank you.